Hello everybody, it's January 7th, 2022. This is a public analysis video here. I said I was going to do them on Monday and Friday starting in 2022, so that's what I'm doing tonight. So Bitcoin has made a new low, right? We had a low here, we made a new low here. What is interesting about this is that we haven't just crashed down quickly in a liquidation cascade. So to me that says there's probably not that much leverage in the system right now. But we also have not seen a reaction upwards, so we're not seeing the spot buying coming in either. So for now, I am expecting lower on Bitcoin, and this is probably playing out in some manner like this, where we have a W, X, and we're making Y right now. This Y is likely doing at least these 5 waves, which I have marked in blue. And if we zoom in here, I've got marked the areas that are resistance at this point in time, I think, for the 4th wave, which is somewhere in this red box basically. So it's still possible that, let me just make a couple things, point out a couple things here. This I think is pretty clear, that's our 1 and 2, right? So drawing a fib extension downwards, the target for the 3rd wave is typically the 1382 to 1618 extension. We hit that 1382. So 3 could be done. It may already be done, right? If we don't really see this bounce up into this red zone before coming down, we may not be done with 3. We may still yet get another move down. And I'm trying to see, like, in the very micro how that might play out. So this might be 1, 2. This would have to be 3, 4, and 5 if 3 is done. But it is possible, like I said, that 3 is not done, in which case we've got 1, 2, 3, 4, and 5 within 3. Then we'll get a bounce up here, and then we'll still have another wave down for 5. So it's not quite clear where exactly we are. But what I can do is, like I said, mark this resistance zone here. And I did that by drawing a fib backwards from the bottom here to the top. And, oops, sorry, not to the top, to the 2nd wave, between the, basically the start of the 3rd wave, right? So from the end of the, potentially end of the 3rd wave to the start of the 3rd wave, that's where you get your target box. And that's between the 618 and 764 area, which is right there. So that's this first red box here. That's kind of the ideal. If we break above 44.4 or so, that red line now, that's the 0.5 fib, something else is probably in play, right? So if we get back above that red line before making a new low, if we get above that red line, it's possible that something else is going on. And what that something else is, we don't know yet, right? Maybe that something else turns out to be bullish and we go up. Maybe that something else turns out to just be more chop and we go sideways. Either one of those is possible. But that would be our first warning sign, or first indication that maybe something else is going on, right? But in the meantime, this red zone is what I'm looking for as resistance, probably, before heading down further and going to, based on this, again, if the 3rd is already done, which is not super clear if it is or not, but if it is, we would be heading down here to this area, 38 to 39, basically, somewhere in there is the target for that 5th wave. All right, so I'll go over what that means in a second. But for now, I just want to focus in on this 4th wave in the micro, right? So what we have potentially, let me go down to a 15-minute. Okay, so the 2nd red box I have drawn is based on a fib extension from the very bottom to that little high that we made there. So there's like an A wave basically, right? So here's A and B, and then this red box is resistance for C. Actually, it's right here. Between the 618 and the 1236. So that overlaps with that original red box really, really well. So that just gives more confluence basically that this is probably resistance all in this area, right? So we've got A, B, and C could potentially be done there already, but I think we probably see at least another move up. 43K or so would be the ideal region for that to go. That's the 1.0 extension. So I'm kind of expecting or anticipating a little move up, but it is the weekend, so who knows? Volume is going to be pathetic. At the same time, I bet a whole bunch of bears, late shorters, probably have their stops above these wicks. So coming up here, taking out those stops, and then dying from there makes a certain amount of sense for sure. So that is, oops, let me go back over to the hourly. That's the rundown on where I think we are just very, very short term. So basically below 44.4, I still expect at least one more low. And there's that confluence that I have for this to be a fourth wave, or ABC up. Like I said, could already be done, or it could push a little higher, 43 and a half even would be fine for that. And then we should see this final move down in 5, okay? So that's what I'm looking at in the short term. All right, so what does that mean for the longer term then, right? I zoomed out and I said this is looking like, potentially that W, X, and Y, okay? So here's the thing though. Let me go over to the daily chart. I have the W, X, and Y drawn on here, and so I've got a fib extension drawn from W to X and here to Y, right? And then I've got this large green box here as the target for that Y wave. So if we can get that move down to that 38 to 39 area, it could tap the very, very top of that and make sense. So yes, Y could end right there at 38.3. That might be the end of it. But there is a possibility that that is just the first wave. If it goes there, that's wave 1. We could get a second wave and a third wave and a fourth wave and a fifth wave. We could do a diagonal downwards to end Y and get down further into this box. So that's a possibility we need to be aware of. And realistically, the best way to play this is not really to set limit buys, because this is, I guess you could, this is a $10,000 area though. If you wanted to set limit buys all the way from 38 to 28, I suppose you could do that. But safest bet would be to see, once we get that one more low, which I think we probably will in the near future, once we get that, let's see what the reaction is. If we get 3 waves up and nothing more, then we're going to be going lower, right? If we get 5 waves up instead, then the likelihood moves into us going higher and a bottom already being struck. Because from here we should see 3 waves down and then we can go up from there. So realistically, the best way to play this is to wait and see what the bounce looks like when it forms. And if it's 3 waves, we're going down deeper. If it actually forms 5, then the bottom may be in place, and the next pullback after that would be a good buying opportunity. So that's what we need to be watching for. But at the moment, realistically, the bottom can be in anywhere between 28.2 and 38.3. Now, if we get all the way to 28.2, will it stop there? I think so. I think probably. Maybe we get a liquidation wick down below or something, but I don't believe the bull market is over. We still need to see our final wave up to complete this market, this 5th wave up. We haven't seen that yet, right? This is not sufficient. What we've done so far is not sufficient. And we have 2 options basically. for how this is going to finish. If we tap 38 and go up from there, that's actually, I don't prefer that option, to be honest, because that'll be here, that'll be 3 waves. We've got 3 waves up, 3 waves down. What that means is we will then get another 3 waves up, and then another big 3 waves down. And then we'll get another 3 waves up, finally, to finish it off, and this will turn into a giant ending diagonal. And the reason I don't want to see that, even though we may, right? But this is very difficult to trade. Very, very difficult to trade, because you have these giant moves, right? We would see, I mean, this has already been painful enough for a lot of people, right? Coming down from 69 to where we are now under 42 has been super painful for a lot of people. So we will see the same thing again, whatever this high is, which is going to be difficult to ascertain where it is, but hopefully we get an A and a B. That'll give us an idea of where we're going for C anyway. But you know, we're going to have a lot of people right here, oh, Bitcoin broke 100K, woohoo, and then it can very easily crash back down to 50. I mean, we can see a 50% drop before our last move up to the final. Then that really is the top there, right? And then we get a big dump and it comes down who knows how low, right? So anyway, like I said, diagonals are, I've said before, diagonals are very difficult to trade. They are fraught with peril and giant moves, and it's much easier to trade an impulse, basically. So what do we need to see in order for this to turn into an impulse? Well, you're not going to like the answer, because we need to see these lows get broken. So in a weird way, it's actually more bullish to break these lows and go all the way to 28.2, especially if we go exactly to 28.2 and stop and then bounce. That would be phenomenal. I don't know if that's going to happen. Like I said, it could liquidation wick down and then shoot up from there, but if it breaks 28.2, things are going to get a little scary, but I think it's still going to be a strong buying opportunity regardless, even though the math of that doesn't make as much sense, because really it shouldn't go beyond the 1236 extension, but we'll have to deal with that when it comes. But anyway, what I'm saying is, if we break these lows, we can essentially ignore all of this crap and start over. And if we can do that, it should hopefully give us a very nice 5-wave move up for a first wave, followed by a second wave down in 3. That's a strong buying opportunity there, with a stop below there. If it gives us a nice impulse, and then that gives us such clear parameters for the next wave up. It'll tell us exactly where it's going to go. I mean, not exactly, of course, but it'll give us a very, very good idea, and we won't have the as much choppiness, right? Of course, there are always pullbacks, right? But they're going to be a lot easier to deal with in an impulse versus a diagonal, and potentially it can bring us up higher. I mean, if that actually gives us an impulse, who knows how high it could go. It'll depend on where this 1 and 2 forms. So, all of that being said, Bitcoin has a lot of decisions to make in the near future here. I am certainly leaning towards at least 38K being struck fairly soon, 38 to 39. We'll have to see from there how the rest of this forms and how it plays out. I think it would be absolutely wonderful to go down to the 28K area, reset all that action, and give this a chance to actually give us an impulse once again off the lows. And just so anybody who's new knows, right, initially we assumed that's the top of 3, this is the bottom of 4 before our final wave up, right? However, there's a corrective pattern called an expanded flat correction, where instead of this being ABC, which to be honest didn't really make sense because this C was super extended, it actually makes a little bit more sense for this to all be part of A. Here's 3 waves up in B. It was a high B, and now we should get our final move down in C like so, and that can go down below where this A wave started, right? And then we can go up from there. So this is completely within the realm of possibility as far as Elliott wave theory goes. There's nothing wrong with it. Really what we just need to hope happens is, here's our second wave, here's our third wave, right? So I've got this orange fib drawn there. We shouldn't really see it go below the 0.5 fib. That's 25,280. Okay, so moving to 28K is excellent. Moving to 25K is bad news. Okay, and that the reason that's bad news is because if this fourth wave drops below that 0.5 fib of the third wave, this is no longer an impulse. And it doesn't mean we're not going to get a final wave, but it does mean that we're in for a lot more pain and suffering, basically. Because then we're in a even larger diagonal scenario, which is probably this one back here, where we're going to do something like this. I mean, Bitcoin could come all the way down to, I don't even know, it could come down to 16K, it could come down to 12K, 13K, something. It could come down really, really deep if we break that 25. So in any case, I am sitting in cash. I have sold pretty much all of my crypto. I've got a couple alts that I'm kind of playing right now, but I've sold all my crypto for the moment, and I didn't sell here, I sold up higher. And I am short from higher up as well, so I'm happy to be sitting in that and just waiting to see what happens. We need to see a bottom actually prove itself before we do anything, but I do believe, like I said, bull market's not over. We should see a higher high still, and potentially still within 2022. I think, you know, that's within the realm of possibilities that we get a really strong finish to the year. But I said it in the last video I did in December, you know, we are very likely going to see a dump to start off January. In fact, that was the title of my video, Expect a New Year's Dump. And that's what we've seen. So even though we're seeing this dump at the beginning of January, like I said, I do believe the remainder of the year should be pretty strong for crypto. At some point, you know, not necessarily right away, but at some point we should start heading up again strongly, and we'll just need to keep monitoring the action to see how exactly that happens. All right, hopefully that was helpful for everybody to make some plans and not get completely wrecked when you're trading. Definitely not the time to be playing with high leverage, or if you do, make sure you're using proper risk management. That's my little spiel. And if you enjoy the video and want to hear my analysis on equities, stocks, metals, oil, and altcoins, make sure you join www.tradelikeawhale.com. Free 2-week trial to see, you know, see what we offer and go from there. All right, guys. Have a good night. Let's see what the weekend brings.